You know you have a problem when people are trying to make sense of nothing making sense. You came here for the truth, so let me unveil that for you. Today we're going to look at a few topics I think you'll be interested in. The first thing is tech stocks. We're going to show you exactly what's going on, the NASDAQ rising, and other stocks that could benefit from what we saw in the news in the previous trading session. Money losers is the second topic. I'm talking about stocks that are losing money, businesses that are losing money, and yet are gaining in terms of the amount of money flowing their way. And number three, we're going to talk about the central bank digital currencies. This is all over the place, but the Federal Reserve has a message. All of that and more, let's get into it. Here we have some information. I'll start with this, then we'll move into the actual charts. I'll give you everything you need to know as always. S&P 500 and NASDAQ rise to record highs to start the week, led by Facebook. All right, so Facebook went up considerably, as it shows you in this article and a few others. It has actually become part of the trillion-dollar companies. That's right, $1 trillion in this case here. Even though it has been sued left, right, and center, even though it has hit from criticisms from all sides, and it's dealing with so many different scandals, it's a $1 trillion company. This recovery still has a long way to go, and there is still strong growth. But of course, you're probably past the peak growth momentum in the US, so the data will begin to look less impressive, and that could be a concern. So they're waiting right now. The market is anticipating. If you notice, it's been up, definitely, as I'll show you in a second, but it hasn't had that strength that it did earlier this year, and especially last year as well. Investors said the financial markets are likely to be quiet this week leading up to the employment report. Of course, that's supposedly important, even though it never was previously, but now they need some good information. They know that that's where they can get some, good news, so they do. So this is just showing you, now I messed that one up. They're just showing you it's at $1 trillion for the first time right here. I think it's important to note what all this means to you, and that is you as the investor, you as the individual. We're talking about seeing a time in which companies are in this state of abundance. They have more money coming in. They're able to get funding from all different types of things, including SPACs. Before I show you this article here, let me just give you what the update right here. The NASDAQ up 1.25% as of this recording. And you can see, it bottomed out around this point here. Let's just use this one, the 12th of May. Since the 12th of May, it's basically been a straight line upward. And there was a lot of this trade going on between commodities and tech. These were two opposing things, and maybe perhaps they have flipped. But if you look at the commodity index in general, that has been heading higher over this period as well. So let's take a look further into it. You could see what happened with the S&P 500. It has been, in general, moving up in the same direction, though it had some weakness here on the 18th trading session as well as the 21st of June. If you look at the Dow Jones, it had really been the weakest of the bunch. There's no doubt about it. But I think the one that needs to be outlined here is the banks. We're going to talk more about this in a second. The bank stocks are poised to look much, much better. And that's when I showed you here right at the bottom how these would perform. And you could see day after day, on average, they have been performing. I think that by the time you're watching this video, these bank stocks might be up even further. At least there's a lot of reason for it to go that way. Let's cover that in a second. This is key. Record stock sales from money-losing firms ring the alarm bells. If you saw that in the thumbnail, that wasn't me saying it. The title, that's not me saying it. I'm showing you Bloomberg. AMC, GameStop lead troubled companies in flooding the market. Glut of shares provides the latest evidence of elevated enthusiasm. Now, this is just examples that are hot in the news. There are 1,000 other examples that you can use. It's happening now. Since the end of March, almost 100 unprofitable US companies, including GameStop, AMC, have raised money through secondary offerings, twice as many coming in from profitable firms, according to the data. And I believe I have that right in here, but let me show you this first. One way to read the story is that AMC and GameStop are currently businesses that are bad, as evidenced by the fact that they lose money. So there's different ways to look at a business. Of course, you could see companies like Amazon that were losing money for a long period of time because this is a long-term goal that they had. But then you look at other companies which are just not performing well, and their business model, as they mentioned here in this Bloomberg article, is not looking good long-term. But yet the stock is seeing a lot of money running into it. They will like to get into businesses that are good in different ways. AMC by buying up theaters to double down on its current business, as far as I can tell. GameStop by mysteriously transforming into some sort of tech company. 3 years ago, that was a hard sell. It was not easy for the public company to go to investors and say, hey, it turns out that the business we are in loses money. We would like to get into a different business. Would you finance that? Now, I'm not sure it's easy, but it's certainly easier. And they give many different examples here of money being put into places that are certainly looking a lot weaker than what we had previously. Okay? You didn't see this kind of behavior several years ago. Supply glut. Money losers are flooding the market with secondary share offerings. And this just gives you a comparison here, number of profitable firms with secondary offering, number of unprofitable firms. And this is the way it goes. These companies here are raising capital in this way, and there seems to be more money coming in. You see the SPACs, IPOs are simply taking off like we've never seen before. And of course, there's so much in line with that. Take a look at this article here, which is partly the reason why the stock market was really supercharged in this trading session. Judge dismisses FTC and state antitrust complaints against Facebook. As a result, stock goes up like crazy. Okay, and then others come with it. You have to understand what this means. If they're not taking down Facebook, if they're not going to do the whole antitrust thing on them, if they're not going to push them into a place in which they have to split up, they're a monopoly, this and that, what do you think is going to happen to Google, to Apple, to all of these different big tech companies? I mean, I see it all the time. People, they say, you know what, we're going to split these companies up, we're going to do it, and nothing ever happens. Why? Are you ready? If you don't want to hear it, if you don't want to hear the reason why, just cut the video off right now. I'm giving you an advance warning. This is your chance. I'm serious. It's because these big tech companies are simply just an arm of the government. Okay? If you don't like to hear that, I apologize to you. That's a simple matter of fact. US banks to pay extra $2 billion in quarterly dividends. Morgan Stanley, Goldman Sachs, JP Morgan, and Bank of America increased payouts after the Fed loosens the restrictions. So we talked about this. You saw that chart I showed you a moment ago. That was the bank stocks, right? That was the ETF representing the bank stocks. And that index there is poised to do much better because now that the restrictions are loosened, certainly more money is going to flow in. You're going to have share buybacks. And as they show you here, dividend delights, many of the biggest US banks increased their payouts following the Fed stress tests. Absolutely. This is the key, right? We've got a lot going into this right now, and the more money that's floating in from each and every corner, this is going to be beneficial to the stocks, at least in the short term. Number one, companies that are profitable are not more attractive. So it seems like those days are over. Number two, volatility and hype are certainly becoming more important these days. And number three, euphoria and mania are clearly present in the markets today, as you can see from this information. It is very clear, it is very obvious today. And what that means to you as an investor is that your money, you have to be very, very calculated with the risks that you take. Really interesting information here coming out of the Federal Reserve. You generally don't find this information coming out of a group like this, but take a look, okay? The potential benefits of a Federal Reserve CBDC are unclear. Conversely, a Federal Reserve CBDC could pose significant and concrete risks. Can you believe that? Coming from the Fed vice chair himself. Okay? They're saying, what would happen to the banking system? This is something I talked about before. What would happen to the banking system if you're skipping over them and you're going directly to the Federal Reserve? That's what the Fed wants. But hearing the Fed actually talk about the fact that, no, this is not a good idea, it's so wild, it's so strange to hear. I really didn't think they would ever say anything like this. But of course, this is just talking, this is off the cuff, this is not policy. Then we have the Richmond Fed president saying this: we already have a digital currency in this country. It's called the dollar. How many times have I said that before? That's my argument for why the central bank digital currencies don't really need to exist beyond the information I've seen. And actually, literally, they mentioned sort of the same thing. So if you're going to enhance the digital currency, you have to decide for what reason. I still haven't heard a good story about what we're trying to accomplish. Exactly. They're already there. What's the difference? This is not one of the private cryptos at all. It's nothing like that. It's not even blockchain from what I understand. What is the point of it? The US dollar is, in fact, digital currency as it stands. Okay? And really, I think this is the last one I want to touch on. First, the US dollar payment system is very good. It's getting better. That's arguable. Second, the potential benefits of a Fed CBDC is unclear. It poses considerable risks. So our work is cut out for us as we proceed to rigorously evaluate the case for developing one. Now, why? Why are they doing this? Why is this such a big deal today? I don't know. I mean, you have to put that in the comments. It's really no different in as far as I'm concerned. And apparently, according to the Fed themselves, there's more that I wanted to touch on here. You can read it for yourself. Links are in the description as always. One of the things that I've been seeing, with this video, the theme is sort of how the money has been moving in with, delight, essentially. And one of these big themes, the big things, is ESG funds, okay? Oh, it's so environmentally friendly. Well, you could see, left-hand side, BlackRock iShares USA ESG Select. Expense ratio, 0.25%. It's still low compared to mutual funds and so on. But look at the other side. It's the SPD or S&P 500 ETF Trust. Expense ratio, 0.09%. Look at the top 10 holdings. It's almost identical, really. And what's going on? You're going to pay almost three times as much in the expense ratio for what? Because it's an ESG fund. So there's a big push here to get more money into ESG funds. But when you actually look at the companies that are within these ESG funds, my goodness, it's all the same stuff. Don't be fooled by the message that they tell you. I think that's really the key. One point I wanted to make here, if you weren't aware of this already, ARK and 21 Shares are apparently filing for a Bitcoin ETF. This would be number 12 now. I think it's what the SEC is doing. I'm not really sure because you look at Canada, they have a Bitcoin ETF, an ETH ETF. You look at other countries and believe they have it as well. It's not the first one. So what exactly are they waiting for? It's not as if this is a new territory. These other countries do have it in place. But the point is, ARK is going in this direction, and we'll see, because Kathy Wood, aka Kathy, nobody knew who I was 2 years ago, Wood, is doing this, so maybe this will be the one that gets approved. We'll see. And the government emergency loans, the PPP loans and so on, are plagued by a potential $260 billion in fraud. I talked about this previously, and now it comes out again. I think you should be aware of this, because this is what happens when you're trying to just disperse all this money all at once in this way. It just gets squandered. There's no other way to put it, really. Okay, and you got to check this out, because this is really key. I set up the insiders for a particular reason, and that was for me to get around this platform. This platform, not so good. It's good for me to get to you in a way, but oftentimes, in fact, every single day I hear from people, I was subscribed to you, now I'm unsubscribed. Or I clicked the subscribe button, I got the notification bell, and I don't even get your videos. This has got to stop. You've got to get on the insiders to entice you even further. So basically what the insiders is my video 5 days a week. You get the video, comes directly to your email inbox. Okay, but to entice you further, I'm including the 7 critical tips for financial education, this PDF, such a super simple thing that you can share with your friends, with your family. It's got lots of detail. I would definitely highly recommend taking a look at themoneygps.com. If you found this video informative, hit that thumbs up button. I am now on Facebook. I'm on Twitter. Think of any platform, I'm on there. LinkedIn, I'm there. So search me out. There's different content than you're getting here on this channel. So you've got to take a look, whatever that platform might be to you, Instagram and Facebook and so on, Twitter, get on there, type in the Money GPS and subscribe to me there. That's all. If you want to check out this other video, click it. It's right here. This has been performing extremely well. I'll see you there.